What if I told you I could summarize our country's past 45 years of financial history in a 1-minute overview of the Dow Jones Industrial Average? So that's going to be my challenge today as I have another blog on creating your beautiful life. So I'm outdoors. It is gorgeous in Minnesota. You see the lake in the background, birds are singing, and again, I'm Tim, and today we're going to talk about Wall Street and the stock exchange. So I first got involved with investing right out of school when I graduated and started my first job. There was incentives of matching 25 cents on the dollar, I believe it was, for the first 6% of the money you put in. So it was free money, hard to resist. It was in a regular IRA, not a Roth IRA. So I think if I had to go back and tell my younger self something different, I would have put it in a Roth IRA, given how much taxes come out now. Of course, it's pay me now or pay me later. But the beauty of a Roth IRA is your earnings are also not taxed. So the appreciation is going to be huge if you leave your money in the stock market. I believe I read something where if you were in the stock market for any 8-year period since its existence, you would never lose money. So again, it's a long-term investment. I know there's day traders out there that try and make money on a daily basis. I would never recommend that. And again, that's just me. I'm very conservative. And if you're a Dave Ramsey disciple, he would say most of the millionaires have just picked a good mutual fund, invested in their company's IRA, and kind of let their money ride that out for 40, 50 years. So time is definitely your ally with investing, with compound earnings, compound interest on your earnings. And so that would be my recommendation. Get involved with investing as soon as you can. You're not going to miss the money if you take it out right away. So start your savings plans early. I'm not going to get into a lot of the history of the stock market because that's I've listed some of that down below, and I'm going to give another overview, like I said, just attach that to this video here. In the early 1980s, the U.S. economy was recovering from stagflation. The Reserve's tight monetary policy laid the groundwork for economic expansion. The late 1980s witnessed the rise of corporate takeovers and leveraged buyouts. The euphoria was short-lived as the stock market experienced a sharp decline in October 87, known as Black Monday. The 1990s emerged as a decade of unparalleled growth fueled by technological innovation and the proliferation of the internet. The bubble burst in the early 2000s, leading to a significant decline in the index. Following this crash, the U.S. economy entered a period of recovery, buoyed by low interest rates and housing market expansion. However, the housing bubble burst in 2007, triggering the onset of the global financial crisis. In response to this crisis, governments and central banks around the world implemented unprecedented stimulus measures. The Dow recovered from its lows, driven by investor optimism and government intervention. COVID sent shockwaves through global financial markets, leading to one of the swiftest and deepest market declines in history. The Dow experienced extreme volatility with record single-day losses and gains. Governments and central banks responded with massive stimulus efforts to support economies and financial markets. But with that, again, if you're on our blog, make sure you can sign up and for our email and have that delivered directly to your inbox. If you're on TikTok, like and follow. If you're on YouTube, you can subscribe and like and follow. So appreciate all the support that we've been getting this far. TikTok is really picking up for us, getting several hundred views on each video, so that's just climbing. So again, thanks. Wish you a good day and good health.